Growfast is a manufacturer of fertilizer. 5 years ago, Growfast was in the news as a result of theft and fraud allegations. According to the newspaper articles based on an anonymous source, Mr. K. Knock was the financial director at the time, misappropriated funds for his own gain. Mr. Knock was asked to step down immediately. As a result of the publicity that accompanied his exit, Mr. Knock was unable to find an alternative occupation pending the outcome of investigations. Subsequent investigations had revealed that the allegations were bogus and that it was made by an employee that had a personal vendetta against Mr. Knock. As a result of this, Mr. Knock lodged a legal action against Growfast, claiming that he was unfairly dismissed. He claimed compensation or loss of income as well as reputational damage caused by the dismissal and the allegations. On 24 May 2016, the court reached a verdict that was concluded that Mr. Knock was indeed unfairly dismissed. Growfast was ordered to pay the following amounts to Mr. Knock as a result of the court case. An amount of $180,000 as compensation for legal costs incurred by Mr. Knock. The amount is payable in 4 equal biannual installments, with the first payment being payable on 31 May 2016. An amount as compensation for loss of income for the past 5 years, as well as an additional amount for reputational damage caused. The court ordered the parties to enter into negotiations with regards to the amount to be paid. In accordance with the court order, the amount and payment terms should be concluded by 30 September 2016. Now, our financial year end is 30 June 2016. So, before the year end, 31 May 2016, an amount of legal costs was payable of $180,000 in 4 bi-equal installments, and then after year end, 30 September, they should have settled on the other compensation for the loss of income and reputational damage. Now, the following entries and disclosure were made in the records of Growfast for the year ended 30 June 2016. On the 31st of May, they debited legal cost, expense account, profit and loss, $45,000. Now, 45,000 times 4 will give me 180,000, and they credited their bank 45,000 rand. On the 30th of June, they debited legal costs in their P&L account with 135,000, and they credited legal costs payable 135,000. Now let's just stop there for the moment before we actually going on. Are you in agreement with this accounting treatment of the 180,000? Well, yes and no. Yes being on the 31st of May, I'm not happy with that entry, because what happened on the 31st of May? The 31st of May, an obligation existed that Growfast had to pay 180,000 rand. The fact that they're going to settle that payment in 4 bi-equal payments got nothing to do with the fact that they have a liability of 180,000 rand that needs to be recognized in the current financial period, because that is the legal cost incurred in the current financial period. So what I would have liked to see there was legal cost P&L 180,000 rand debit, bank credit 45,000 rand, and legal costs payable 135,000. And that would have taken care with the first entry. If I have done that in that fashion on the 31st of May, there was no entry needed on the 30th of June. However, on the 30th of June, they created the additional 135,000 expense and the commitment of the other 135,000. So if I look at the total impact of the transactions passed for the current financial year, they would have achieved exactly the same thing that what I've said that I would have liked to see my books as of 31st of May already. So they have an expense here of 180,000, which is correct, because that is the total cost incurred. They have an outstanding liability of 135,000, which is also correct, and they have settled 45,000, which is also correct. So in totality, although I'm not 100% happy that they have passed it in 2 tranches, the net impact on my financial statements for the year ended 30 June 2016 will be correct. Then they give you extract from the statement of financial position of Growfast for the year ended 30 June 2016, 2016 Rand, 2015 Rand, and note. Non-current liabilities, long-term loan, total non-current liabilities. Current liabilities, trade and other payables, VAT payable, and then total current liabilities. In the notes of trade and other payables, they show trade payables, here's our legal cost payable, SARS, and bank overdraft. And you have to criticize the treatment and the disclosure of the information. Now, if you go back to the extract of the statement of financial position, Growfast, it should have been a separate line item, Growfast Limited. Then it should have been extract from a statement of the financial position as at, not for the year, as at 30 June 2016. I'm happy with the 2016 Rand to 2015 Rand, non-current liabilities, long-term loan. I'm fairly happy with that. But clearly, the loan couldn't have been 1,250 Rand and 1,300 Rand. And here you can see that with 135,000. So it is not Rand, it must be Rand thousand. So, or 000 apostrophe S. Rand thousands, because that is clearly the denomination and the rounding that they use in the financial statements. Now, that payable should form part of trade and other payables, and that should have been disclosed in the note and not on the face. The only tax that you show under current liabilities as a separate line item on its own is income tax payable, but that is not income tax. So that payable should be disclosed as part of trade and other payables. Then in the trade and other payables note, well, trade payables is fine. Legal cost payable is fine, except that your rounding and your R and your R thousands is missing there. That should have been indicated there as well. SARS pays you in, that's fine. Bank overdraft, you are not allowed to show the bank overdraft as part of trade and other payables. The bank overdraft should have appeared on the face of the statement of financial position under current liabilities. So let's quickly go and check and see whether we have everything. Statement of financial position as at 30 June, no level of rounding, although it's clearly rounded to the nearest thousand. The note to the financial statement heading does not indicate with the company as well as the relevant period. Oh, that one we've missed. On top of the notes, you should also have the name of the company, Growfast Limited, notes to the financial statements for the year ended 30 June 2016. Bank overdraft should not be included in trade and other payables, should be disclosed as a separate line item under current liabilities. There is no non-current liability in relation to the legal cost payable, although the last payment is due more than 12 months from year end. So that is also one that we've missed. It is 4 biannual payments. 1 we've made this year, 2 we're going to make next year, so there's still 1 left for the year thereafter. So the non-current liability, the full 135,000 outstanding liability should not have been shown as a current liability. 45,000 Rand of that should have been shown as part of non-current liabilities. And I think that was the only thing. This is the other considerations. Accrual basis of accounting. It should be disclosed when expenses is incurred, but not when cash flows take place. That is all about the 135,000 to the 180,000. Growfast has accounted for the legal cost only when it was paid and not when it was incurred. It, however, correctly accrued for the expense at year end. And there is exactly what I've said when I started to discuss the question. I would have seen in May that they have passed this entry for the full 180,000. And then when they paid the 45,000, then 24 May, that is where the commitment actually originated. When they paid, they would have then reduced the outstanding legal fees payable with 45,000 Rand. Fair presentation. In order to be a fair presentation, these financial statements have to be relevant reliable, comparable, and understandable. Now, guys, you must have yourself led by the fact of how many marks a question like this is counting. If it's only counting 5 marks, then you could have stopped there where I said, oh yeah, I think it's now the end of the story. But if it counts more than 5 marks and you haven't written that much and there wasn't that much to write, then you must take it a little bit further and then we carry on with fair presentation. So we say that financial statements should be relevant, reliable, comparable, and understandable in order to be a fair presentation. Now, the amount payable in regards to the compensation for the loss of income and reputational damage is not disclosed in the financial statements at all. Yeah, we haven't addressed that fact. So this will be not a fair presentation as it is expected that it will be significant. Now, that is the stuff that will only be decided in September. Because we're sitting at 30 June, it is not to say that we shouldn't mention this because it could have quite a big impact on our accounting figures of the next year. Now, the amount payable in relation to the compensation cannot be measured at year end, but management is, however, must make a reliable estimate of what that amount should be. There is a current obligation for Growfast to pay it, so the court has already decided that they are liable for some amount, so that we don't know what the amount is going to be, but based on a reliable estimate, we should have passed something in our books at year end. And for sure, if we didn't pass any accounting entries, we should have made mention of what is the possible impact of such a court case. Right.